Hello students, welcome to AffairsCloud. My name is Shashmita. We have an app by the name CareersCloud which you can go and download through the Play Store. Once you have downloaded the application, you will easily be able to log in using your Gmail ID. And once you have logged in, you will be redirected to this page where you will be getting this UI. And there will be option for home, all courses, my courses and doubt section in this application. You will be getting multiple PDFs, multiple content on daily basis that will be enhancing your learning. Under Crack Current Affairs, you will be able to see multiple options. First one is Current Affairs English. We upload the day-to-day basis news in the English format. And apart from English PDF, we also provide them in Hindi format. And this banking awareness, we upload a PDF every month. So this PDF will contain the banking news, banking and the finance news of that respective month. And Current Affairs Exam PDF will have two categories. One is that most important news of that particular month will be uploaded in this Current Affairs Exam PDF. And also Exam Perspective PDF will also be uploaded. And next is Special CA. This will contain Union Budget, Economic Survey, and also the most important events that had taken place globally as well as nationally. And next most important is topic wise. So the entire news of that particular month will be segregated into different topics. And in order to recollect whatever you've read, we also provide you with topic wise quizzes. Apart from that, we also provide state current affairs. Now, here if you see, we provide you with the day-to-day PDF, and this we provide you with the weekly PDF. So that particular week news will be compiled into a PDF and in question and answer format in English and will be uploaded here. And to enhance your learning, you can also, to enhance and strengthen your learning, you can also attend the quiz. Here we provide you with the entire news of that particular week. But here we take the top 60 most important news and we upload it in this PDF in question and answer format. Apart from weekly, we also provide you the monthly ones. This PDF will contain detailed view of that particular month news. And this will have a brief format of the same news. This will be in the form of a question and answer format, and this will have the top 100 question and answer of that particular month. We also provide you with the PIB news on a day-to-day basis, which you can go and read in these particular tabs. Apart from that, we also provide the Union Budget and Economic Survey. You can also attend after reading the PDF, you can also go and attend the quiz. This is available in the Special CA category. We also provide state level current affairs. So this will be very helpful for students who are preparing for state level exams. For example, if you are preparing for Tamil Nadu state level exams, then you can click this tab and you will be able to see all the current affairs or news related to Tamil Nadu. Apart from that, we also provide PDF from the exam perspective. Suppose you are preparing for RBI assistant mains, then this tab will contain 5 to 6 months of current affairs, which has high probability of being asked in RBI assistant mains. Similarly for SBI PO, RRB PO, clerk mains, all these are being given under this section. And also we provide separate content-wise, topic-wise current affairs like national affairs, government schemes, international affairs, banking and finance, economy and businesses, MOUs and committees and meetings. All these different types of news are segregated in these particular categories. Hello students, welcome to our new initiative. In this initiative, we will be uploading the weekly current affairs on banking and finance section. So this will be uploaded on every Monday. And so on the whole, per month, you will have totally 4 videos related to this topic. And apart from just providing you with the banking and finance news, we also provide you the conceptual explanation so that this will enhance and also strengthen your knowledge about these topics.
Today, we will be covering December 4th week banking and finance awareness news. Moving to the first news. The first news is about the highlights of the 208th meeting of the SEBI board. So the meeting's agenda was to formulate reforms for the primary markets, small and medium enterprises and the mutual funds. The main objective of the measures was to boost investor protection, encourage transparency and facilitate smoother operation within these sectors. You know that investor protection is the main objective of SEBI. First is SEBI tightens rules for the IPO, that is initial public offers of small firms. So if you see, if any small firms wants to go for an IPO, then it should have a minimum operating profit of 1 crore rupee from any of 2 out of the 3 previous financial years at the time of filing its DRHP. DRHP is Draft Red Herring Prospectus. So any firms who wants to go for an IPO has to file this DRHP with the stock exchange. So if you see the IPO, they have to have a minimum operating profit of 1 crore. The operating profit, it is the earning before detecting the interest, depreciation and tax. The earning before detecting interest, depreciation and tax is the operating profit, and it should be minimum 1 crore from any of the 2 out of the 3 previous financial years. Next is offer for sale. Now what is offer for sale? Offer for sale is when the existing shareholders of the company are selling their stakes. That is offer for sale. So offer for sale by selling shareholders in SME IPO shall not exceed 20% of the total issue size, and they cannot sell more than 50% of their holdings. Suppose there is a shareholder 1 and shareholder 2. Suppose they have 50 and 50. So each they can sell only 25% of their holding at the max. That is, they cannot sell more than 50% of their holding. That is, shareholder 1 can sell only maximum up to 25% of their holding, and shareholder 2 can sell only up to maximum 25% of the shareholding. This is what that has been mentioned. Next is lock-in on promoters' holdings held in excess to the minimum promoter contribution. You know that when before a company goes into an IPO, 100% of the share is held by its promoters. So when it goes for an IPO, this 100% gets diluted, and this shares goes to the public. When it gets listed, these shares gets transferred to the public, right? So even after the IPO, these promoters, they must have, as per the SEBI norms, they must have at least 20% of promoter holding. Even after the IPO, minimum 20% of the shares should be held by the promoters. So that is the minimum promoter contribution. When there is excess promoter holding, that is if they are holding 30%. Okay, the shareholders, they must have minimum 20%. Say they are holding 30% of the shares. So lock-in on promoters holding held in excess. So when there is excess of this 10%, when there is a lock-in on promoters holding, it will be released in a phased manner. That is, lock-in for 50% of the promoters holding in excess of MPC must be released after 1 year, and the remaining 50% must be released after 2 years. So I have mentioned that the 20% is the MPC, the minimum promoter contribution. So here the excess is 10%. So what is that? This lock-in will be removed after 1 year. That is, only 50% lock-in will be removed. That means they can dilute 5% only. Then after the end of the second year, they can dilute the another 5%. The first 50% of lock-in will be removed after 1 year, and the next remaining 50% will be removed after the second year. So the amount for the general corporate purpose shall be capped at to 15% of the amount being raised by the issuer, or rupees 10 crore. Remember, it is 15% or rupees 10 crore, whichever is lower. And also SME issues, whatever will not be permitted for repayment of loan. Suppose they are issuing the shares, right? So they will get income. They will get the issue proceeds in return. That money should not be used for repayment of loan from promoter or the promoter group or any related party. So remember, SME issues will not be permitted for repayment of loans from promoter, promoter group or any related party from the issuer proceeds. And also next is DRHP, that is draft red herring prospects of the SME IPO filed with the stock exchanges to be made available for 21 days for the public. So next is threshold for considering related party transactions as material shall be 10% of the annual consolidated turnover, or rupees 50 crores. So what is this related party transaction? See, when a financial agreement or contract is there between the company and a party, and this party is associated with the director or associated to any key member of the board, then this party is considered as a related party. Okay, so when there is a financial transaction or contract or agreement between this company and this related party, then that is considered as a related party transaction. Now, what is this material? See, when any transaction is very important to be known, to be disclosed to the public, so that it helps in changing the decision. See, they would have already taken a decision whether to buy this share or not. Okay, when this related party transaction is disclosed, then that decision might change. Okay, that is what is called as a material. When a transaction has the ability to change the decision of the shareholders or of the members, then that will be considered as material, which means that a transaction will be considered as material when it has the ability to change the decision of the investors. So the threshold for considering related party transaction as material shall be 10% of the annual consolidated turnover or rupees 50 crore. Whenever any of this limit is reached, then the related party transaction has to be disclosed as a material. Next is securitized debt instruments. So if you see, securitized debt instruments are financial securities that are created by pooling individual loans or debts into a single security and selling it to the investors. See, say these are various customers, 1, 2 and 3. So these customers approach this bank for a loan. So they ask for a home loan. In return, they get a home loan. And what is that? Whatever property that these customers buy, they have to mortgage this property to the bank. This mortgage can only be cancelled after the entire repayment of the home loan. Until then, the property that they have bought from this home loan will be mortgaged to this bank. Okay, so each and every property will have title deeds, right? So this title deeds will be given to the bank. So the property will be mortgaged to the bank, and also the title deeds will be under the custody of the bank. Now, what the bank will do is that under the securitized debt instruments concept, they will appoint a special purpose vehicle. So this special purpose vehicle will pool in all these assets together and sell it as securities to the investors. So remember, all these assets will be pooled in and they will be sold as securities to the customers. So these securities are basically backed by home loans. They are basically backed by mortgages. Okay, so this is called as securitized debt instruments. So remember, these are securities that are created by pooling individual loans or debts into a single security and selling it to the investors. So the minimum ticket size for a single investor, if you see, for originators here, it means the banks or the NBFC who have given the loan to the customers, and with that loan, this pool is being created and sold as securities. So for originators regulated by the Reserve Bank of India, rupees 1 crore at initial subscription and no specification for the subsequent transfer. Remember, the minimum is ticket size is rupees 1 crore at initial subscription and no specification for subsequent transfers, and rupees 1 crore for the originators that are not regulated by RBI. For the STIs backed by listed securities. So if you see, previously we saw they are backed by loans. They can also be backed by listed securities. The amount shall be the highest face value among such listed securities for both initial and subsequent transfer. Remember, for SDI backed by listed securities, the amount shall be the highest face value among such listed securities. And also the offer period will range from minimum 2 working days and to maximum 10 working days. And no single obligor should have more than 25% of the asset pool provided and must have a track record of operation spanning 3 financial years. This is in order to reduce the risk. So if one single obligor has entire 100% of the asset pool, then it means that the risk is more, right? So in order to diversify the risk, no single obligor should have more than 25% of the asset pool provided. Next is that SEBI introduced new measures to curb misleading investment return claims. So a new initiative called Past Risk and Return Verification Agency to prevent misleading claims about the investment returns. So this agency will carry out the verification of risk return metrics for investment advisors, research analysts and algorithm training. Next is review of provisions regarding corporate governance norms for the high value debt listed entities. Now what are these high value debt listed entities? They are companies that have listed non-convertible debt securities worth at least 500 crores. So we know that non-convertible debt securities means debt means nothing but bonds. Okay. So non-convertible means they cannot be converted into shares or equities. That is what it means. So convertible means these debt, when you surrender it to the issuer, they will convert it into an equity and you will become a shareholder of that entity. But here in case of non-convertible, you don't have the option of converting into an equity. At the time of maturity, you will get the principal amount. That is what this means. So when a company have listed non-convertible debt securities worth rupees 500 crores at least, then they are called as high value debt listed entities. Now this threshold has been changed. Now instead of this 500 crores, this has been changed to 1000 crores. That is the new thing. So the SEBI board has increased the threshold for identification of high value debt listed entities from rupees 500 crores to 1000 crores, which is at par with the large corporates. Next is merchant bankers other than banks, public financial institutions and their subsidiaries shall undertake only permitted activities. So if you see, merchant bankers are not like any normal bankers. They play a different kind of role. Like, they do not accept deposits and all. They give financial advices and all to high net individuals. They are involved in the IPO process of any unlisted entities. So they will help the unlisted entities in the entire IPO process by evaluating the financial statements of the entities. They will tell like how much money can be borrowed and what should be the price of each of the share that is going to be listed. So all these detailed ideas, all these detailed information will be provided by the merchant bankers to the unlisted entities. It will help the unlisted entities in the listing process. And also apart from that, it also plays a vital role in the merger and acquisition. So if a big company wants to acquire another company, then it will help in evaluating the financial conditions of this company and tell it to the major company. So this is the role that has been played by the merchant banker. So this merchant bankers may carry out other regulated activities as a separate business unit with a separate brand name within a period of 2 years after obtaining the registration from the respective regulatory authority. And if you see, there will be 2 categories of merchant banks based on the net worth and activities. First category is when the net worth is not less than rupees 50 crores and are allowed to undertake all permitted activities. Under the second category, the net worth not less than rupees 10 crores and allowed to undertake all permitted activities except managing equity issues on the main board. Remember, first category, the amount is 50 crores. Second category, the amount is 10 crores. Next is they should maintain a liquid net worth of at least 25% of the minimum net worth requirement at all times. So liquid net worth means these can be immediately converted into cash. So out of the total net worth, at least 25% has to be maintained as a liquid net worth. Next is merchant banks are required to earn revenue from permitted activities as follows. So category 1, they are allowed to earn revenue of at least 25 crores on a cumulative basis in 3 immediate preceding financial years, and category 2 should have a revenue of at least 5 crores on cumulative basis in 3 immediate preceding financial years. Remember, the revenue amount is 25 crores under category 1, and here under category 2 the revenue amount is 5 crores. The next one is that underwriting limit for the merchant banks have been prescribed as 20 times of the liquid net worth. So if you see, this underwriting limit is that when an entity goes for an IPO, it goes to the merchant bank, and the merchant bank analyzes the financial statements of the IPO and provides the financial advice at what price the share has to be sold, how much money has to be raised from the public for this IPO. All this will be provided by the merchant banker to the entity regarding the IPO. So the merchant banker will also tell that if there is some unsold shares, so you're going for the IPO, if there is some unsold shares in the IPO, then I will buy the unsold shares. This merchant banker will provide as an assurance to the entity which is going for an IPO. So this underwriting limit, this is the underwriting limit, and this underwriting limit has been prescribed as 20 times of the liquid net worth. The underwriting limit is prescribed as 20 times of the liquid net worth by the SEBI. The next news is about a loan agreement between India and ADB. So India and Asian Development Bank signs a $350 million loan agreement to expand the manufacturing sector in India. So if you see, this is a policy-based loan agreement under the second sub-program of SMILE. So SMILE full form is Strengthening Multimodal and Integrated Logistics Ecosystem. So this is to improve and modernize India's logistics sector. So it is very, very important to improve the logistics sector, not only for the internal movement of goods, but also for the export. So in order to improve your export also, logistics is very, very important. So if you see, this main program comprises of 2 sub-programs and aims to expand India's manufacturing sector and improve the resilience of its supply chain. The program develops a strong policy framework to enhance logistics efficiency by strengthening institutional support for multimodal infrastructure development at national, state and city level. So next is Maharashtra and ADB have signed a memorandum of understanding of rupees 1,527 crore for the Nagpur Metro Rail project. So ADB and European Investment Bank together, they will provide a loan amount of 3,586 crore for this metro project. Out of this 3,586 crore, 1,527 crore will be provided by the Asian Development Bank. And this Maha Metro will receive this funding in Japanese yen. So this project will cover a distance of 43.8 km. Next news about the report that has been released by World Bank. So World Bank has said that India has emerged as the topmost recipient of the remittance among the low middle income countries with around $129 billion inflow in 2024. So the first position is taken by India, followed by Mexico in the second position with an inflow of $68 billion, which is a huge difference. If you see, India had received $129 million as inflow, but here if you see Mexico, it has received only around half of what India has received as the remittance. Third place is China, $48 billion. Fourth, Philippines, $40 billion. And fifth is Pakistan with $33 billion. This surge is mainly attributed to a recovery in the job markets. So remittance, who send remittance to the countries? People who are residing outside India, they send money to in order to invest or to their fellow people, like to their relatives or friends in India. So this is how the remittance money is sent to the country. So main thing is when the job market has boomed outside India, then a lot of job opportunities have come, and a lot of people have moved out of the country in turn of the good job opportunities, and they in turn send money back to the country. So this is how the remittance has increased. So due to the recovery in the job markets in the high income countries, this is the main reason that has contributed to the increase in the remittance. So as per the data, remittance inflows globally increased by 5.8% in 2024 compared to 1.2% growth in 2023. The report highlighted that officially recorded remittance to the low middle income countries are projected to reach 685 billion in 2024. And out of the 685 billion, around 129 billion itself is contributed by India. The report noted that the remittance inflow account very large percentage of the gross domestic product in smaller economies. So if you see in Tajikistan, out of the GDP, suppose if the GDP is 100 crores, then out of it, 45 crores have come as remittance. That much huge contribution the remittance is playing in these countries. In Tajikistan, 45%, in Togo, 38%, Nicaragua, 27%, and in Lebanon, 26%. The report highlighted that over the last 10 years, remittances have increased by 57%, while FDI has decreased by 41%. So if you see, remittance is growing very huge, tremendously, but FDI, it is not even growing, but it is decreased. It is a saddening factor. So the report also underscores the need for continued policy efforts to reduce the cost of remittances, which currently stands at an average of 6%. The United Nations Sustainable Development Goal 10, that is SDG 10, aims to lower this cost to 3%. So suppose if you want to send 100 rupees to a person residing in your country. So suppose you stay in US and you want to send 100 rupees to a person staying in India. Then 6% means it will cost 6 rupees. The cost of sending itself is costing 6 rupees. And as per this SDG goal 10, they are planning to reduce it to 3% by 2030. The South Asia region is projected to register the highest increase in terms of remittance flow, that is 11.8% in 2024 compared to just 5.1%. So if you see, it's more than the double. So in 2023, it marked a growth of only 5.1%, but now in 2024, it had marked a growth of 11.8%. This growth is driven mainly by continued strong flows to India, Pakistan, and Bangladesh.
We have launched a new course called Static Banking Awareness course. Now this course will be helpful for students who are preparing for the banking exams and for the regulatory body exams. And also, recently you would have seen Paytm Bank in news frequently. So when an aspirant reads this news, he would have ample number of questions like what is a payment bank, what are the norms for it, and which is the committee that has launched it. So This static banking awareness course lays a foundation to the current banking and finance news. Now, you have to download our Careers Cloud to access this course. Once you have logged into our app, you can go and click this all courses icon, and then you'll be redirected to this page. In this, you have to go and click the static banking awareness course, and under the details tab, you will be able to see a brief about this course. And under the part tab, it will contain all the contents, all the topics of the contents that are currently available in this course. We are working on this continuously, and this will be completed within 2 months. Under the free tab, you can go and access one content, that is the origin and development content, for free. You can go and read this content and have an idea about this course. After reading this content, do attend the quiz that is also available under the same tab. Now, our team has allocated ample amount of time and resources to curate this content. We have created this content from various books and from various verified websites. Our content is better than any book that is available in the market. This is because we update this content on a dynamic basis. For example, there are currently 39 DRTs that are available in the country now. In future, if one more DRT is created or added, then it would become 40. So we would update this content on a dynamic basis. But in case of books, you have to wait for the next publication for this updated content. Nowadays, a lot of practical questions have been asked in the banking exams. For example, how many public sector banks are available on the stock exchange? Which is the payment bank that is being listed on the stock exchange? So, we try to cover as many practical questions as possible in this course. Apart from this, we also provide you a question bank that will contain around 3000 questions and the previous year questions along with it. We also have a dedicated tab that will release the important RBI notification and the frequent news released by the RBI. You can use this code B15 to avail 15% discount. This is one of the highest discounts that we have offered until now. So do avail this code B15 while you purchase the course.
The next news is about SEBI. SEBI deferred ESG disclosure deadline under the BRSR framework by 1 year to financial year 26. ESG is the environment, social governance, and BRSR is business responsibility and sustainability reporting. So this has to be, the environment, social governance disclosure had to be done by financial 25, but now the deadline has been postponed by 1 year, that is to financial 26. Now why this has been done? This has been done to ease the business. So SEBI has decided to postpone the environmental, social and governance disclosure deadline for the value chain partners of the listed companies by 1 year, that is to financial year 26. What is this? It is a type of corporate disclosure that helps companies demonstrate their commitment to sustainability and responsible business practices. We know that companies' main motto is profit. So they want to make as much as profit they can. But the investors and also the customers now, they are concerned about their environment and social practices, whether they are disturbing the environment while creating profits or whether they are following unethical practices. So all these are also governed by the investors and the customers. Now it is more transparent than how it was previously. So that is why this is also one of the important factors to be considered by the investors or by the customers while buying the product or shares. That is why this is very important, and that is why the company has to ensure that they follow the environmental and social practices strictly. This move aimed to promote ease of doing business for listed companies and their value chain partners in achieving business responsibility and sustainability reporting requirement. So with this disclosure of ESG for value chain will remain voluntary instead of the present comply and explain. So now currently it is voluntary and it is not compulsory. The board members of the SEBI has further decided to reduce the scope of the value chain to cover the top upstream and downstream partners of a listed company, individually accounting 2% or above of the listed entity's purchase and sale by value. Now what does this mean? If you see, this is the company, the listed company. Okay, the value chain of the product is from the sourcing of raw materials till the distribution of the finished products. So the value chain encompasses not just this part where the manufacturing of the product is done, but it starts from the sourcing of raw material to the distribution of the finished products to the distribution channels, right? So if you see the ESG impact, that is the environment, social, governance impact, it can happen anywhere in this value chain. It can happen here, it can happen here, or it can happen here, anywhere. So that is why SEBI has told that the entire value chain has to be considered in this ESG disclosure. So if you see, this company is the direct operation. Here it is an indirect operation. So the direct operation impact on this ESG is quite minimal. But the indirect operations can have huge impact on the ESG. They may not follow the ESG, that is environment, social governance, like they may violate any human rights violation, or they may cause any detrimental to the environment around it. So these kind of impacts can happen in the indirect operation in the value chain. The direct operation is only this part, but this has very less impact on the ESG. That is why SEBI has told that it is very important to include the value chain in the ESG calculation. So this, if you see, it is the downstream that is mentioned here. It is the downstream partners and the upstream partners. Now what they have told is that you have to reduce the scope of the value chain to cover the top upstream and downstream partners of a listed company, individually accounting 2% or above of the listed entity's purchase. Say suppose this company is purchasing around 100 crores of raw materials from various suppliers, right? A, B, C. So what they are telling is that include only 2%. You cannot include all the suppliers into the value chain. That will be very complicated. So what SEBI is telling that include only 2%, up to 2% of the total purchase. So 100 crores means if you are buying 2 crores from A, then you have to include it in this ESG disclosure. If you are buying just 1 crore from C, then you don't have to include C. This is what this 2% means. Similarly, this applies even to this distribution channels. So I hope you understand this. So companies can limit disclosures to 75% of their total purchases and sales by value. SEBI has introduced a new leadership indicator in Principle 6 of BRSR under mandates listed companies and the top 10 value chain partners to disclose green credits created and procured. So we know that green credits, they are a unit of incentives provided to a company or an individual or a small SME unit. So when they have done any favorable environmental activities, in turn this unit of incentive, that is green credits, will be provided to them. That is what is green credits. The next news is about SEBI. So SEBI notified new asset class called SIF with minimum investment of rupees 10 lakh. So this SIF is Specialized Investment Fund. So this is between the portfolio management services and the management fund and the mutual fund. So if you see, this SIF is not as high as PMS and not as low as mutual fund. So that is why it is in between this PMS and mutual fund. So mutual fund, we know that the mutual fund manager, they pull in money from different customers and they invest in various stocks and various money market instruments. And in case of PMS, what is that? A fund manager will be there who will look after your entire portfolio. So here, if you see, the fund manager will buy and sell securities on your behalf, on the customer's behalf. But in mutual fund, it is basically the customers who go and buy the mutual fund units voluntarily, right? So that is the main difference between mutual fund and fund manager and the PMS. And PMS, if you see, it is quite riskier than the mutual fund. And mutual fund, if you have even 500 rupees, you can go and buy mutual fund units. But in case of PMS, sometimes the minimum entry value is around 25 lakhs or 50 lakhs. So various PMS have various entry level. So minimum 25 lakhs or 50 lakhs is required to participate in this portfolio management services. And in case of mutual fund, even if you have 500 rupees, it is enough. You can go and buy mutual fund units. So this SIF, it is in between these two. That is, here in SIF, you need a minimum of 10 lakhs or above for investing under this specialized investment fund. So the primary objective of introducing this new asset class is to bridge the gap between the mutual fund and the PMS while ensuring robust risk management and the investor protection. So if you see mutual fund, it creates a diverse portfolio spreading risk across a range of assets. Here, in case of portfolio management services, they are tailored investment solutions where a professional portfolio manager actively manages a portfolio for individual clients. And in mutual fund, if you see, it is comparatively lower risk because the diversification is very large. So here, it is comparatively low in risk. But here, if you see, the portfolio tends to hold fewer stocks, each with substantial weight, and so the risk factor is high. This is the main difference between the mutual fund and the portfolio management services. So as per the new rules, it is mandatory for the fund manager of the SIF to have the relevant National Institute of Security Market certification. So for fund manager of SIF, he or she should hold this NISM certification. It is also allowed that investment strategy in SIF, it can be open-ended or close-ended or interval investment strategy. So either of these, it can be followed. An investment strategy is not allowed to invest more than 20% of its NAV in the debt instruments, including money market instruments as well as non-money market instruments issued by a single issuer. So if you see, if the total investment is 100 crores, not more than 20 crores should be invested in this debt instruments. So in case of debt, if you see, the government securities, treasury bills, tri-party repo, they do not have any exemption. They do not have any limits. However, if you want, you can invest in these instruments. There is no limit. So these are exempted from any such investment restriction. However, it is possible to extend the investment limit up to 25% of the NAV of the investment strategy with prior approval of the board trustee and the board of directors. So previously we saw that only 20% can be invested in debt instruments and also in non-money market instruments by a single issuer. But if you have a board approval, then it can be extended up to 25%. And also for equity investments, the investment limit on a single company exposure is set at 10% of the total assets, but the ownership limit for a company has been increased to 15%. What does this mean? Say suppose the total investment value, the total asset value of this SIF fund, total value is 100 crores. So it has pool in 100 crores. It means that in a single company, say the company name is ABC. Okay. In that, you can invest maximum 10% of the total assets. So out of this 10%, which means that 10 crores can be invested at the maximum in this ABC company. Say this ABC company total worth is 50 crores. Okay. So total worth is 50 crores. What they're telling that the ownership limit for a company has been increased to 15%. That is, if you invest 10 crores in this, then it means that you are having more than 15%. 10 crores means there's almost 20% ownership in this 50 crores. Remember, out of the total SIF fund, 10% you can invest in a company, but you can hold only 15% of the ownership of the company. So I am telling you that the ABC company total worth or total paid up capital is 50 crores. And in that, if you invest 10 crores, that is, if the SIF fund invests 10 crores, it means that it is holding an ownership of 20% in this ABC company. That is not allowed. It can hold only maximum only up to 15%. That is all is allowed, which means that it can invest only up to 7.5 crores in this case. So remember, total investment, it can make 10%, but the ownership in that company can be maximum only limited to 15%. I hope you understand this point. So SIF, they are allowed to allocate maximum 20% of the assets in the real estate investment trust and the InvIT, that is infrastructure investment trust, but the investment should not exceed 10% in a single issuer. So if there is a single issuer, only 10%, but overall in REIT and InvIT, the SIFs can invest up to 20% of their fund. So you know that REIT is nothing only but people, they pull in their money and they invest in the real estates like malls, office spaces, warehouses and all, and that generate income in form of rental. So these offices, malls, they have to pay rental, right? So this rental was the profit from this fund and that is distributed as dividends to the investors. At least 90% of the profits are distributed back to the investors. So this is their return. This is how REITs work and this is how the InvIT work also. InvIT, if you see, they are invested in infrastructure like highways and all. They are invested in that. In REIT, they are invested in real estate like malls, office spaces, warehouses. So like mutual fund schemes, the new asset class will provide investors with an option of SIP, SWP and systemic transfer plans. So whatever these plans are already in mutual fund schemes, this option will also be available for this SIF. Next is RBI report states freebies crowd out resources required for development. So we know that many political parties, they provide these freebies in order to win the election. So each and every political party does this. So by what happens is that what RBI report states that because of the freebies, the economic development is being affected. The economic development of the country is being affected. That is what is mentioned in detail in this report. So RBI released a report titled State Finances, a Study of Budget of 2024-25. The report has cautioned about farm loan waivers, free electricity and transport by the state governments could possibly crowd out their resources for social and economic infrastructure development. So when you use money for these freebies, then you will not have money for the social and economic infrastructure. That is what has been mentioned in this report. The theme is physical reforms by states. The report highlighted that capital expenditure increased from 2.4% of GDP in financial year 22 to 2.8% and the budgeted is 3.1% in the financial year 25. So the capital expenditure is being growing. So that is a very good thing to be noted. The report further highlighted the weak financial status of state-owned electricity distribution companies, that is DISCOMs, which have been consistently posing challenges for the state government finances. So you see, most of the DISCOMs, most of the distribution companies owned by the state government, they are running in loss. Mainly because few governments, they give free electricity units to the people, or because they charge very less compared to the production cost, and that is why this DISCOM is suffering loss, and in order to compensate the loss, state government finances are being used. So though the DISCOM is running in loss, people working at there should be given salary, right? So where does that money come from? From the state government treasury only. So that money has been used for this purpose. So that is one of the main challenges that is being faced by the state government finance. Outstanding debt of the DISCOMs has increased at an average annual rate of 8.7% since 2016-17, increasing from 4.2 lakh crore to 6.5 lakh crore. So if you see, the debt of the DISCOMs have also been increasing, and now it stands at 6.5 lakh crore in 2023. Next is report has projected that the revenue expenditure of states will increase to 47.5 trillion in financial year 25, which constitutes 14.6% of the GDP compared to 13.5% of the GDP in financial year 24. So in financial year 24, the revenue expenditure was 39.9 trillion and is expected to reach 47.5 trillion in financial year 25. So we know that there are two types of expenditure. One is revenue and capital. Capital is when you want to increase the capital infrastructure of the country. Then when you invest in the infrastructure of the country, that is called as a capital expenditure. Revenue expenditure, we know that it is recurring in nature. So it is not a one-time expenditure, unlike the capital expenditure. It is recurring, like the salary and all you pay, and the rent of the buildings, of the government buildings. So all that, if you see, it is a recurring payment. The pension, the salary, all is a recurring payment. So this is a revenue expenditure, and this has increased compared to the previous year. The report showed that the average buoyancy states' own tax increased from 0.86 to 1.4. So the tax buoyancy measures how responsive a country's tax revenue is to change in the GDP. So if you see, if the GDP is increasing, obviously the tax also has to increase, right? So when the previous product, if the production value was previously 100 crores, and say, assuming hypothetically, assuming the tax is 15%, then it will be 15 crores. And say now it has been increased to 150 crores or say 200 crores. Then now again the tax will also increase to 13 crores. So if you see, when the GDP increases, the tax revenue also increases. So that is what is measured by this tax buoyancy. That is, it is the ratio of the change in tax revenue and change in GDP. A tax buoyancy of over 1 means that a tax revenue increases more than the GDP, while a lower tax buoyancy means the tax revenue don't increase as much as GDP. Say, suppose in 2019, the GDP, just an example, GDP is 100 crores, then tax was say 10%, then the tax revenue would have been 10 crores. Now say 2023, say the GDP was 200 crores, and now say the present rate it was 15%, then which means that the tax revenue would have been 30 crores. If you see the increase in GDP, it is around 100%, but the increase in the tax revenue is more than 100%. So that is the difference. So if you see, the change in tax revenue is way more than the change in the GDP. So here if you see in the tax buoyancy, it is more than 1. And here if you see when it is lower, then it means that tax revenue do not increase as much as GDP. That is what this tax buoyancy calculates. The state's dependence on market borrowings has surged, accounting for around 79% in the financial year 2025. And gross market borrowings of the states and the union territories increased by 32.8% to 10 trillion in the financial year 24. So if you see, if the income of the states is less, if the expenditure is more than the revenue, in that case states borrow from the market, that is borrow from the people or from the market. That is what is mentioned here. The next news is about India's GDP forecast by the CARE Edge ratings. So if you see, in December 2024, the CARE Edge Ratings, a subsidiary of the CARE Ratings Limited, has revised down its GDP projection for India to 6.5% for the financial year 25. So remember, CARE Edge Rating projected 6.5% for the financial year 25, and it has projected nominal GDP of 9.9% against the budgeted estimate of 10.5% for the financial year 25. Now we know that nominal GDP will always be greater than the real GDP. Here this is the real GDP that has been projected. So if you see, in case of real GDP, there will be a base year that will be fixed. So in case of India, the base year is 2011-12. So say in 2023-24, the entire units of production is around 100. So 100 units of production has taken place. Say 1 unit, this is all an assumption. So say 1 unit of production is 20 rupees. Then in 2023-24, the nominal GDP will be 2000. Okay. Suppose in case of real GDP, what we does is that here the value of the unit in 2011 and 12 is taken and not of 2023-24. This 20 rupee per unit is the value in 2023-24. But here we are going to use the number of units of production in 2023-24, but the price of the unit will be of 2011 and 12. That is the base year that have been chosen. So say suppose the base year's unit price was 10 rupees. In that case, this is the GDP, 1000. So you see that always the nominal GDP will be higher than a real GDP because the nominal GDP factors in inflation concept within itself. So the real GDP plus inflation gives you the nominal GDP. So nominal GDP, it takes into the inflation in consideration, but real GDP, it doesn't. There is a base year fixed and the base year's price is taken, but the production is of the current year. This is the main difference between the real GDP and the nominal GDP, and that is why the nominal GDP will always be higher than the real GDP. And if you see CPI and WPI, that is the consumer price index and the wholesale price index, financial year 25 the projection is 4.8% and for 26 it is 4.5% and WPI it is 2.5% and 3%. The projected that the physical deficit of the central government will be 4.8% of the GDP for the financial year 25. The MD and CEO is Mehul Pandya. Next is about the foreign direct investment inflows. So as per the data released by the Department for Promotion of Industry and Internal Trade, India reached a significant economic milestone with gross FDI inflows totaling 1 trillion since April 2000. So since April 2000, total FDI investment in India has reached 1 trillion. So remember who releases this data? It is DPIIT, that is Department for Promotion of Industry and Internal Trade. So this information is also very important because they might ask you like who releases the FDI data. Remember it is Department for Promotion of Industry and Internal Trade. The government's flagship initiative like Make in India, GST simplification. So all this is all these are the reasons for this increase in this FDI investment. So the top FDI investors in India are, first is Mauritius. They have invested about 25% of the total FDI. So if you see around, if the FDI has been 100 crores, Then around 25 crores has been invested by Mauritius. Next 24% around 24 crores, and US comes in the third position around 10 crores. So remember, it is 25% Mauritius, 24% Singapore, and US 10%. So we are also in the 40th position in the World Competitive Index. We have come up from 43rd in 2021. And also Global Innovation Index, India ranks around 40th position. And India was the third largest recipient of the Greenfield projects. So next news is about the appointment. Ram Mohan Rao Amara, the Deputy Managing Director and the Chief Risk Officer of the State Bank of India, has been appointed as the new Managing Director of the SBI for 3 years. So FSIB, that is Financial Services Institution Bureau, makes this recommendation to the Appointment Committee of the Cabinet, and the Appointment Committee of the Cabinet approves the appointment of the Managing Director of SBI. Now, mention in the comment section that who is the head of this Appointment Committee of the Cabinet. So now Ram Mohan Rao will be the 4th Managing Director of SBI, along with Ashwini Kumar Tiwari, Vinay M. Thomse and Rana Ashutosh Kumar Singh. So we know that the current chairman of SBI is C.S. Sethi. So he was the MD. Now he has been promoted to the chairman position. To fill his position, Ram Mohan Rao has been appointed. So next is R. Subramanian Kumar has been reappointed as the MD and CEO of RBL Bank. So reappointed R. Subramanian Kumar is for a period of 3 years from 23rd June 2025 to the 22nd June 2028. So under Section 35B of the Banking Regulation Act 1935, the bank will apply to the RBI for the approval of reappointing Subramanian Kumar as the MD and CEO for additional 3 years. So remember, it is the Section 35B for reappointment of the existing MD and CEO for additional 3 years. And after that, RBI will make the approval. RBI will check if it is okay with it, it will approve, otherwise it will deny. Next is World Bank approves $325 million loan to boost the agriculture in Uttar Pradesh. So this loan will be provided by the IBRD. It is one of the arm of the World Bank. So here it is the International Bank for Reconstruction and Development. It will provide $325.10 million loan for the Uttar Pradesh Agriculture Growth and Rural Enterprise Ecosystem Strengthening Project. UP agrees. So it is a 32.5 years maturity and a 6-year grace period has been provided. So if you see in the last 10 years, Uttar Pradesh has played a key role in Indian agriculture. That is, it is leading in wheat production, second in rice, and third in agriculture exports. Though this much of improvement has been seen, but still the small farmers still face a lot of issues, like they face low productivity and poor post-harvest infrastructure, and also so that they also get benefits, they also reap the benefits. That is why this loan has been provided to uplift these small farmers and also get the benefit that the entire state has been getting. Next is RBI granted full authorization as a payment aggregator under its regulatory framework to the InSolutions Global Limited, a Mumbai-based fintech company backed by the JP Morgan Chase & Co. So remember the name, it is InSolutions Global Limited, and it has been given the authorization of payment aggregator. So from now it will be operating as a payment aggregator. So this will complement the already existing capability, that is prepaid payment instrument license, PPI license. So this InSolutions Global already has this PPI license, and now it has got the payment aggregator license from RBI as well. Next is Yes Bank launches Yes Business. Now what is this Yes Business? It is a digital platform that has been launched by the Yes Bank in order to help the MSME and the business people. So this will combine core banking services with additional tools to simplify the business operation. So the MSME and business, they can avail for quick access to funds through a collateral-free overdraft of up to 25 lakh. And also simple digital onboarding allows for a completely online current account setup with video KYC. So remember, it is Yes Business by Yes Bank. Next is World Bank approves 800 million loan for the development of Amravati. So we know that Amravati is the new capital of Andhra Pradesh. So in order to develop it as a very strong capital, the Andhra Pradesh has got loan from the World Bank. So Amravati Integrated Urban Development Project, Greenfield Capital City of the Andhra Pradesh. So if you see, the total loan tenure is 29 years, including a grace period of 6 years. India has chosen to take the loan in Japanese yen. The World Bank and the Asian Development Bank are supporting the first phase of the city's development. Now, why has India wanted the loan in yen? So you have other currency like dollar, euro, pound, but still India wanted the loan in yen. What is the reason for that? One is the low interest rate, and second is the foreign currency keeps losing its value. So if you see, the interest rates are very low, often less than 1%. In contrast, a USD loan with an assumed interest rate of 5% would result in much higher annual interest payment. So the yen, Japanese yen, they offer low interest rates loan. So that is one of the reasons for choosing yen as the favorable loan currency amount. And second is foreign currency keeps losing its value. So if you see, the rupee has shot by a whopping 18% compared to the yen since the beginning of 2023. Now, how will this benefit the Indian companies who borrow or the states who borrow in yen? So an Indian company, say, has secured a $1 billion yen at the start of 2023, which would cost it 67 crores compared to that at that time exchange rate. So whatever was the exchange rate at the start of the 2023, then 1 billion costed 67 crores. But now if you see, the rupee again gaining against the yen, and the yen is trading at around 55 paise. Then the company can repay the same loan for only 55 crores, saving them 12 crores. So due to the depreciation of the yen, the same 1 billion yen will cost only 55 crores now, which had costed 67 crores a year back. So the Indian company will save 12 crores. So because of these reasons, India had chosen the yen as the favorable currency for taking loan from the bank. So the World Bank's largest shareholder, if you see, first is US with 17.25% of the total subscribed capital. Second, Japan. Third, China. Fourth, Germany. And fifth and sixth place, if you see, it is occupied by the same, because France and UK. So in the fifth place, you have France and UK with equal percentage, that is 4.06%. The president is Ajay Banga. Next is RBI approves Canara Bank's plan to sell stake in two subsidiaries. The two subsidiaries are Canara Robeco Asset Management Company and Canara HSBC Life Insurance Company. So if you see, the bank will reduce its stake by 13% in CRAMSC and 5% in the Canara HSBC Life. So this is based on an exemption granted by the Government of India. The bank must lower its stake in both the companies to 30%. So Government of India has told that the Canara Bank has to lower its stake to 30% by October 31st, 2029. So Canara HSBC Life Insurance, the shareholders are Canara Bank 51%, HSBC Insurance 26% and Punjab National Bank 23%. In case of CRAMC, it is Canara Bank holding 51% of the shares and Japan's Oryx Corporation 49%. Next is RBI had imposed 47 lakh penalty on the IndusInd Bank and Manappuram Finance. So around 27 lakh had been imposed on the IndusInd Bank. The reason is that they had opened certain savings account for the ineligible entities, and 20 lakh on the Manappuram Finance, because RBI found the company failed to verify the customer's permanent account number, that is PAN, using the issuing authorities facility. So if you see, generally the banks, they have to cross check the PAN with the issuing authority. Issuing authority is the income tax department. So only then we know that if this is the PAN belongs to that person or not, or if this PAN is a fake PAN or not. So it is very important to cross check with the issuing authority. So the Manappuram Finance had failed to do that, and also it had assigned a multiple identification codes to some customers instead of unique customer identification code. So for these reasons, RBI had imposed a penalty of 20 lakh on Manappuram Finance, and if you see in IndusInd Bank, the fine amount is 27.3 lakh. Next is SEBI unveils website for the Association of Registered Research Analysts of India. This is the website that has been unveiled by SEBI, and if you see, ARRAI. It is a trade body of the SEBI registered research analyst, and it was established in March 2024 as a Section 25 company. The next news is RBI lifts business restriction on the ECL Finance and the Edelweiss ARC, that is Asset Reconstruction Company. So why was this actually initially placed? It was because these companies were involved in the evergreening distressed loans. Now, what is this evergreening distressed loan? This is a concept that has been followed by the banks or the financial institutions, that they provide a loan or some benefits to the customers who are in distress, that is, who are not able to pay their loan back, so that the customer can pay back the loan, and so also that the loan does not turn into an NPA. So in order to prevent NPAs, in order to prevent creating of NPAs, this evergreening of loans takes place. So they either provide a new credit to the customer who are not able to pay, or they may extend the maturity instructions. So something like this will happen so that that loan does not turn into an NPA. That is this evergreening of loan, and this is kind of a bad practice that is being followed by the banks, and RBI is trying to tackle this evergreening process done by the banks.
Thank you for watching the session. I hope you had enjoyed it. We're also available in Telegram under the name AffairsCloud_official. We also have an Instagram handle. Apart from this, you can contact us directly on 9677333862 regarding any courses that we offer, or regarding any payment issues. You can contact directly on this number. Thank you.